As we head into the final stretch of 2025 and look toward 2026, homeowners across America are waking up to a nightmare they never saw coming. In 5 states, home values aren't just declining, they're entering freefall. Insurance companies are abandoning entire regions. Inventory is exploding at levels unseen since 2008. And prices? They're on track to crater up to 40% from their peaks. This isn't a forecast, it's already happening. The American housing market heading into 2026 is experiencing something Wall Street analysts are calling a structural breakdown. Not a correction, not a cooling period. A full-scale collapse in specific regions, driven by forces so severe, they're fundamentally breaking the real estate equation. States that led the pandemic boom, where prices exploded 60 to 80% between 2020 and 2022, are now facing the most brutal reversal in modern history. Insurance premiums have tripled in coastal markets. Inventory has quadrupled year over year in Sunbelt cities. And population exodus is accelerating as residents flee unsustainable costs and climate reality. Bloomberg, CoreLogic, and Wolf Street analysis confirms it. 5 states are at the epicenter of a price collapse that could reach 40% total correction from peak to trough as we move through late 2025 and into 2026. For homeowners who bought in 2021 or 2022, this represents catastrophic equity loss. For strategic buyers with cash and patience, it's a generational opportunity. If you want to protect your wealth and avoid financial disaster, hit subscribe to Housing Intel right now. We deliver data-driven real estate intelligence that cuts through the noise and shows you exactly where the market is heading. Let's break down the 5 states where home values face maximum risk and where the deepest crashes are already underway. State number 5, North Carolina. North Carolina earned its place on this list because its pandemic boom flew under the radar, but the collapse won't. Cities like Raleigh and Charlotte became magnets for corporate relocations and remote workers fleeing high-tax northeastern states. Home prices surged 40 to 50% in just 2 years, completely disconnected from local wage growth. Now the music has stopped. Raleigh home prices have already dropped 2.2% year over year, and inventory is climbing relentlessly. What makes North Carolina particularly vulnerable is that these price increases weren't organic. They were speculative moves driven by out-of-state cash buyers and corporate incentive packages. When those incentives dry up and companies reverse remote work policies, demand evaporates. Locals can't afford homes priced for California salaries. Analysts project another 15 to 20% decline through 2026 as prices revert to what North Carolina incomes can actually support. The correction is just beginning. State number 4, California. Despite sky-high baseline prices that seem to defy gravity, California is facing a reckoning driven by forces beyond typical market cycles. Mass population exodus, wildfire insurance costs spiraling into the tens of thousands, and punishing property taxes are creating unsustainable pressure even for affluent buyers. Sacramento home prices are down 8% from their 2022 peak. San Diego has shed 4%. Oakland has crashed 24% since May 2022. San Francisco is down 16%. But the real crisis is insurance. In high-risk fire zones, homeowners are now paying $15,000 to $25,000 annually for coverage, if they can get it at all. Major insurers, including State Farm and Allstate, have pulled out of California entirely. Add in continued population outflow. California lost over 500,000 residents between 2020 and 2023. and you have a market where million-dollar homes are sitting unsold for months. Heading into 2026, the absolute dollar losses will be staggering. State number 3, Texas. Texas was the undisputed champion of the pandemic housing boom. Austin, Dallas, Houston, and San Antonio became magnets for tech companies and investors chasing double-digit appreciation. Austin alone saw prices explode 63% between mid-2020 and mid-2022. Now Austin is leading the collapse. Home prices have plummeted 24% from their June 2022 peak, the second largest decline in the entire nation. Fort Worth is down 9%, San Antonio down 8%, Dallas down 6%. What triggered the crash? Massive overbuilding combined with speculative frenzy created a supply glut that's now suffocating the market. New construction that was rushed to market during the boom is sitting empty or being sold at steep discounts. Texas also faces a unique structural problem: its property tax system. With no state income tax, Texas relies on property taxes that are among the highest in America. As home values decline, tax assessments don't adjust fast enough, meaning homeowners get crushed by punishing bills even as their equity evaporates. Market analysts project Texas metros could see another 15 to 25% in declines through 2026. For Austin specifically, that would mean a total correction approaching 40% from peak to trough, wiping out virtually all pandemic-era gains. State number 2, Arizona. If Texas is collapsing, Arizona is imploding. Phoenix, the poster child for unsustainable Sun Belt speculation, is now the second most vulnerable major market in America. Home prices in Phoenix have already dropped 10% from their July 2022 peak. Mesa is down 9%. Glendale down 9%. Gilbert down 8%. But these official numbers significantly understate the crisis because they measure closed sales, not asking prices or the desperation of sellers. Between mid-2020 and mid-2022, Phoenix prices exploded by 60%. The market went completely vertical, fueled by speculation and investor mania. Now inventory has quadrupled year over year. Builders are offering $40,000 to $60,000 in incentives just to close deals. Arizona's problems extend beyond oversupply. The state is facing an intensifying water crisis that threatens long-term viability. Record-breaking heat is making summers nearly uninhabitable, and insurance premiums have doubled in 2 years due to climate risk. These aren't temporary headwinds. They're structural problems that fundamentally undermine Arizona's attractiveness. Analysts project Phoenix and surrounding metros could see total declines of 25 to 30% from peak through 2026, with some overbuilt neighborhoods potentially hitting 35 to 40%. For investors who bought in 2021 or 2022, this represents catastrophic wealth destruction. State number 1, Florida. Florida isn't just number 1 on this list, it's in a category by itself. The Sunshine State is experiencing a housing apocalypse driven by converging crises so severe they're fundamentally breaking the market heading into 2026. The numbers tell the story. Cape Coral home prices are down 20% from peak. Fort Myers down 13%. Sarasota down 12%. St. Petersburg down 10%. Tampa down 6%. Jacksonville down 5%. Orlando down 4%. Even Miami is down 3%. But these median sales prices significantly understate the real crisis. Active listings in major Florida markets have more than doubled year over year, creating a buyer's market unseen since the Great Recession. the insurance crisis in Florida is beyond catastrophic. Average annual premiums have exploded to $12,000 to $15,000 for basic coverage. In coastal areas and flood zones, it's $20,000 to $30,000, if coverage is even available. Multiple major insurers have completely abandoned the Florida market, leaving homeowners dependent on Citizens Property Insurance, the chronically underfunded state-backed insurer of last resort. Citizens is already massively insolvent and would collapse entirely if a major Category 4 or 5 hurricane makes direct landfall on Miami or Tampa. That's openly acknowledged by the Florida Office of Insurance Regulation. Florida homeowners are one catastrophic storm away from total financial ruin. Then there's climate reality. Florida is ground zero for sea level rise, intensifying hurricanes and chronic flooding that's making entire coastal neighborhoods uninsurable and eventually uninhabitable. Add property taxes that have skyrocketed as local governments scramble to maintain services, and the math becomes impossible. Homeowners are facing $15,000 in insurance, $8,000 in property taxes, $3,000 in HOA fees, all before their mortgage payment. The investor community that fueled Florida's boom is now in full retreat. Airbnb operators are dumping properties as occupancy rates crater. Foreign buyers are pulling back as they realize Florida's climate risks aren't priced in. They're being systematically ignored. Market analysts project Florida's hardest-hit markets, particularly Gulf Coast cities like Cape Coral, Fort Myers, Sarasota, and Tampa, could see total corrections of 30 to 40% from 2022 peaks as we move through the end of 2025 and into 2026. Miami and Orlando will see less severe but still significant declines, potentially 15 to 25% total correction. Jacksonville might escape with 10 to 15% losses. But make no mistake, no Florida market is safe from this collapse as we head into the new year. From North Carolina to Florida, from Texas to Arizona, the pattern is undeniable. These 5 states aren't experiencing normal market corrections. They're undergoing fundamental restructuring driven by oversupply, insurance collapse, climate risk, and the complete reversal of pandemic-era migration trends. For homeowners who bought in 2021 or 2022, especially in markets like Austin, Phoenix, and Florida's Gulf Coast, this represents potentially catastrophic equity loss. Homes purchased at peak prices are now underwater or rapidly heading there. But for strategic buyers with cash reserves and patience, this collapse creates a generational opportunity. Properties that sold for $700,000 in 2022 will be available for $400,000 by mid-2026. The crash isn't coming. It's here. The data is clear, the trend is undeniable, and the collapse is accelerating. Knowledge is protection, and these numbers reveal exactly where not to buy, and where the deepest value will emerge over the next 12 to 18 months. If this analysis opened your eyes to the reality of the housing market, smash that like button right now. Subscribe to Housing Intel for weekly data-driven intelligence that shows you exactly where the market is heading before it gets there. Ring that notification bell so you never miss critical updates. And drop a comment below. Which state shocked you the most? Are you buying, selling, or waiting? We read every single comment. We'll see you in the next breakdown, where we reveal the markets that are actually worth your money. Because sometimes, knowing where not to invest is the most profitable decision you'll ever make.